hop on here and chat a little bit more about what we're seeing in our markets, and especially in Central Florida, what we're seeing from buyers, sellers, and realtors, even about what's going on with property taxes and what's actually true, what's information, what's a proposal, and what's not. So yeah, we thought it was important to hop on here and chat a bit about it.
Hey Matt, how's it going? Thanks for having us on. So
Of
yeah,
course.
we're hearing a lot of the same you are. Coming this November, there is a proposed tax bill, or there's a proposed bill to uh, lower property taxes in the state of Florida. And like yourself, we're getting a lot of inquiries about people about exactly what it is that it means. And I think there's so much misinformation on the internet, shockingly, with not only clickbait, social media, but we also have professionals in our industry that are spreading information that they really shouldn't be. And it's really starting to confuse a lot of people, especially people that are either currently living in Florida or are moving to Florida, whether they're buying a primary residence, second home, investment property, or commercial piece of property. So there's a lot of misinformation out there. So I'm hoping maybe some of the stuff that you and I talk about today will help take some of those myths off the table, give people the facts. And we always suggest, doing your own research before making any decisions, especially a decision of this size. So, a couple things that I want to bring to attention. What's happening is in November, they are putting a proposal on the table that needs 60% of Florida voters to approve it to essentially not eliminate property taxes like you're seeing, but to increase the homestead exemption for Florida property owners. So the homestead exemption is something that if you have a primary residence in the state of Florida, you get a certain amount of exemptions off your assessed value or market value of your property. And what
Right.
that means to you is essentially lower tax bills. Um, Currently, right now, I think it's capped at $50,000, if I'm not mistaken. The bill is proposing 2027 for that 50,000 to go to 150,000, and in 2028 go from 50,000 to 250,000, which will have a pretty big impact. But I don't think it's as big of an impact as everybody thinks it's going to be. And the fact that people are out there saying it's going to completely eliminate property taxes, I think, is just complete, utter BS, in my opinion.
Yeah, and I think part of it is because we live in such a day and age where it's like everyone's trying to get the clicks and they're trying to get the traction and they can leverage that. So I think there's a bunch of different kind of pockets of this of like a lot of people are using AI to go and generate
Mm-hmm.
images and these things stating this is what's going to happen when in fact it's all proposals. It's not even actually put into print yet. So I think for me, like with buyers that I, especially because a lot of the people I work with are relocating from out of state, I have a lot of people that are saying, okay, now what does this change for us? And the reality is I've been just advocating that honestly it's nothing right now. It's definitely proposals. It could affect things in the future, but instead of going and hypothesizing of what's going to change, we have to first let's get to November, get approval, and have the vote pass, and then take it steps from there. And then I think from the seller standpoint is we have some sellers thinking that they can leverage their property that way already. Like we go to put the property on the market, and they're like, future, property taxes being eliminated. I'm like, guys, why are we thinking about it this way? And that's another reason I wanted us to have this conversation because I don't know everything. I'm always trying to educate myself. So I'm like, let's bring in the professional as well, who does lending and, handles the finance side of things to talk more in depth about what's reality and what's a fallacy.
Yeah, 100%. And I think the biggest question that we're getting is the same question you're getting. How is this going to affect me? And, the number one answer I said is, well, we don't even know if it's going to go through yet. So if you're planning to hold off on purchasing a property because you believe that taxes are going to be eliminated, you're living in fantasy land, unfortunately. Now, come November, like Matt just said, if it is proposed and it does pass, that's a different conversation. And from my perspective, property taxes in Florida have gotten expensive. That happens when property values from 2020 to 2026 literally almost went up 50%, even higher in some markets. So
Mhm.
you're going to expect to pay a higher property tax. But if it does pass, it will be an advantage to homeowners and home sellers. Two of the biggest things right now in Florida, well, three of the biggest things right now in Florida and most states is the current interest rate environment where we're at. We're sitting at almost year highs as of today. Property taxes, because values have increased so much since COVID, and insurances, especially in Florida, because you had major hurricanes, you had condo collapsing, you have a lot of things that affect the insurance market, and all those things together are making home affordability in the state of Florida, amongst many other states, almost unattainable for most homeowners or most prospective homeowners or current homeowners. So if this does pass, absolutely, it's going to be a win for everybody across the board. But I'm doing some research on here. Property taxes are the second biggest revenue generator for the state of Florida behind sales tax.
Right.
So if you start to eliminate that, I guess my question, and I'm not asking you to answer it, but where's that money going to come from? Florida's one of the few states that have a surplus in their budget. But if you eliminate property taxes and the amount of people that are moving into the state, my professional opinion is I think you're going to have a shortage somewhere, and that shortage is going to have to be filled by somewhere somehow, and either that's higher property tax or sales tax, hospitality taxes, corporate taxes, whatever it is in the state of Florida that generates revenue for the state. It will certainly have to be made up for if you do eliminate that.
Yeah, and I think that's part of the reason why the conversation needs to happen now instead of waiting because number one, I think just like how we had a change, at least in the state of Florida, where buyer broker agreements came into effect, it's always important to really get ahead of it and
Yep.
know, weed out the nonsense from what's factual. So I think that's why it's important for us to talk about this now of like, okay, if nothing's in place yet, but this is the game plan if things do come into play. But it's exactly like you said, when it comes to infrastructure and things of that nature, I just don't I worry about like even fire stations and policing and things of that nature. There was a friend of mine that lives in Melbourne, and I don't know this as a fact, but she mentioned she works with the local government there, and she was saying that they were supposed to get a fire station that was approved within the next year or two, that was going to be because there were so many people, like you said, moving into that area,
Yeah.
so much new construction, and now they don't know if they're going to have approval because they're worried about their budget shortfall if they eliminate portions of property tax. So I just don't know of where else to pull that money from if they're not getting it from like a hospitality tax or something.
Right.
Now, are you seeing, because I've also heard things about potentially charging more or making people who have second homes pay more potentially on their taxes instead
Yeah,
of
I mean, based upon what I'm reading, I guess most of this focus is certainly on the primary residence side of things.
yeah,
One of the reasons, and this started happening years ago, especially during a very low interest rate environment like COVID, a lot of people started acquiring second and third and fourth and investment properties in Florida, which dried up a lot of the inventory. So 3, 4 years ago, Fannie Mae, Freddie Mac, the FHFA, not FHA, put what they call a loan level pricing adjustment on second homes and investment properties. And the easiest way to layman's terms is it's a tax on the interest rate if you want to pursue those kind of properties. So what's happening now is most people are focusing this on a primary residence. And the number one question, I think, one of the top questions is, what do you think would happen to property values if this passed? I certainly do think there'll be a bump in property values. I mean, listen, if there's more affordability and there's less taxes that you have to pay, even if it's incremental from 50 to 150, I think that's a big deal. And I think that will get some more people into the market. But at the same
correct,
time, if you're a seller and you understand that the demand is going to be higher if this goes through, then from a perspective of a seller, the supply side of things, you're going to want more money for your house because you understand there's going to be more buyers and more demand and more people that qualify to purchase your home, which will drive prices up. So, what will that do in terms of not only the cost of the home, but what is the break even point from, okay, sure, your property taxes go down a little bit, but if you're paying incrementally higher on the home, what is that
right,
expense going to run you? And is it going to be enough to offset their deduct or reduction in the property taxes? Only time will tell, but I think, like you said, the biggest thing is the misinformation out there. And I think all of us are on most of us are on social media and so forth. And we see this a lot in our industry, and we see it a lot in your industry. We have realtors that are talking about lending things and lenders talking about real estate stuff. I have a license to lend money. You have a license to sell homes. I should not be giving my fact online of what you do for a living. That is your job, not my job. It's the same thing when realtors go online and start talking about interest rates and they don't disclose the APR. Or my lender can do this, or my lender can do that. You are taking information and you're weaponizing it to the public by asking them to come to you for more clicks and for more inquiries, which is a fine line to walk. But I think from my perspective and working with you over the years, you and I have really put in place a lot of guardrails to make sure that the information we do put out there to our public is information that we can all use as something that, whether it's fact or proposed, we always advise to look and do your own research before making that decision. And clicking on somebody's Instagram profile or TikTok video isn't a source. It might lead to a bigger conversation. But with the advent of AI and everything else, and even AI has a lot of this stuff wrong, do your own research to find the information that you want that's going to help you make your decision. Because buying a home, selling a home, these are typically your largest financial transactions you do in your lifetime. You want to be equipped with all those things.
Well, and two, it's like know where you're getting your information from
Yeah.
as well, because like, you can people can give feedback saying, oh, well, it takes like $200 in a 2-week course to get a license, a real estate license, X, Y, and Z. But not everybody is great. That it's not everyone's made equal when it comes to their
No.
profession. So it's like, if you're seeing information coming out, make sure it's also from a reputable party too. Like, if you have someone's uncle that sold one property in the last 24 months spouting off about what the potential future real estate for Central Florida or Florida as a whole looks like, you might want to question the validity of some of those statements, because again, some people just like the interaction and the clicks, and then you're going down this rabbit hole of things that aren't even true.
100%. And I want to repeat this. And you said it. This hasn't this isn't law yet, people. This is a
Yeah.
proposal
Right.
for something that's happening in November, and we're in a midterm election year. So you're going to hear a lot of politicians, whether they're for it, against it, whatever it may be, using this as one of their topics to generate interest and to get you to listen to them, just like any political person that's going to do in the next 3 to 6 months. And whether or not it does pass or doesn't pass, it will be a topic of conversation. And people like you and I, experts in the field and doing the amount of business and volume that we both do, we've got to be a resource for these people. But at the
Right.
same time, being a resource also takes a lot of responsibility, and you have to be able to make sure that that responsibility is given to your clients and make sure that they do their own responsible thing by verifying what you say. Listen, my wife will tell you this, I'm not right 100% of the time, but before I come out and say something, 95% of the times I'm going to do the research behind it. And
Right.
one of the things that I wanted to talk about with you is exactly what we're talking about now. I just think that there's so much conversation happening about it, and it does. And from a lending perspective, it's interesting because Florida is one of the few states where property taxes are paid in arrears. What that means is your property tax for
Required.
2026, we don't even know what they are yet, right? They don't come out until November. In October, you get what you call a trim notice, which is a proposed budget, passed or not passed, and what your property taxes may or may not be.
Mhm.
And with the exorbitant change in property values over the past couple of years, a lot of confusion happens. Take away what's going to possibly happen in November. A lot of my clients get this shock and awe that they buy a house today for $500,000 and the property taxes are $3,500, and then they come to find out the following year they jump to $7,000. That is something you need to be prepared for. And one of the things we see the most, and I'm not calling out any specific person, but we see a lot of loan officers that don't take the extra time to give the customers the information they need to not only buy the house in today's environment, but what it's going to cost them a year from now. Because a lot of
Correct.
people don't realize those property taxes are going to jump in 95% of the time significantly higher than where they're at. And 90% of the counties in the state of Florida have a proposed tax estimator where you can go on your property appraiser's website. You can punch in the value of what you're going to pay for the home and see what those taxes are going to be. Be prepared for that, because the last thing you want to do is get to a point where you bought a home and you thought your mortgage payment was $3,000 and you're comfortable with that, and all of a sudden that payment jumps to $3,500. Now, will this proposed property tax maybe help that? Sure, maybe, but $50,000 to $150,000, that's a big jump. That's a substantial jump. And if you get to the 250 in 2028,
Yeah, I
that's
think
even a
that's
bigger
a
jump.
a
But those
huge.
are so far, yeah, those are so far down the road that you got to focus on what's today and what's true
Yeah,
today. Yes, you want to take in information that you think could affect the future, but for right now, all it is a proposal. And
yeah.
that's all it is until we get fact that it's passed.
Well, and it's the same mindset of when people are like, "Oh, we're gonna wait until, prices go down, et
Or
cetera."
interest rates are coming down.
Right, the same exact thing, and it's like, "Oh, we're gonna wait for property taxes to go away," and it's like, guys, like, if you want to buy a home, then you buy a home based off what's going on now and what's concrete, not what's, a hypothetical. And it's such a good point because we see it in the deals we work together when it comes to taxes of there's so much misinformation when it comes to like the new construction side of things with taxes, but also, the other day there was a house that was three doors down from one another. One had taxes at 8,000, one had taxes at 3,900. Same exact floor plan and everything, but
Yeah,
one was homestead and one wasn't.
right.
And the buyer was like, "Oh my god, this is a deal. We have to go with this one because the taxes are so much lower." I'm like, "Guys, next year that is going to skyrocket." And that just shows you where taxes actually will be if you don't homestead as well, but they're going to go up. And, that's why when we always get, either second opinions, or if I have a client that has a primary lender and I'm like, hey, get a second opinion, it's alarming to see how many people don't have even accurate monthly payment estimates because of the tax piece.
100%. And Matt, I can't tell you how many times we get a customer that calls us the following year and says, "Holy cow, I forgot to file for my homestead exemption." And
Yeah.
people need to understand, you purchase a home in 2026, for instance, you have until March 1st of 2027 to file for that homestead exemption.
Yeah.
Now, it's not going to help you with your 2026 taxes, but it will certainly help you with your 2027 taxes. Remember, taxes are paid in arrears. Florida is one of the few states that do
Yeah.
that. So it gives you that leniency. But I have several clients that miss that boat. Take the proposal off the table. If you're purchasing a home or if you purchased a home, make sure you file for your homestead exemption. It's one of the few things that you get for free in this world, especially now. The proposal, whether it passes or doesn't pass, will be a great impact, but still, at a minimum, if it doesn't pass, if you're not filing for your homestead exemption, you're leaving, it depends, five to a couple $1,000s on the table every year, which is money that you can keep in your pocket for whatever it is, discretionary income that you guys want to use to go vacation or buy
Right.
something, do what you want to do, repair your home. But yeah, it's wild to me that so many people almost feel like this is going to happen, and that's what they're basing their decision off of. And they think that, well, I'm not going to have to pay property taxes, so my budget of $3,000 is no longer going to include this $500-600 cost for
Right.
taxes. That is not the case. And until it's passed, until we truly see it, and this is just a framework of what they're doing. They really haven't even seen what happens. And
Yeah,
if
it
you
can
want my
change.
personal,
Yeah.
yeah, like you said, where is this money going to come from? And I think the reason why they're doing this framework is because they ultimately want to see, if it does pass, what happens to budgets? How does it affect all these other different things, schooling and fire stations and water and sewer and all these other things that you pay for as a homeowner in the state of Florida? What is it really going to do? And I think that's why they're not just coming out of the gate saying, hey, we're eliminating property taxes. They're
Right.
going to take a very small, balanced approach to see how it works. And year in and year out, just like anything else, they're going to look at it, examine it, make sure it makes sense moving forward. Because at the end of the day, that money's going to have to come from somewhere else. And whether that's higher sales taxes, hospitality taxes, corporate taxes, you name it, it's going to affect somebody somewhere, somehow. Yes, we're all home if you're all homeowners in Florida, but depending upon what you do for a living or where you live or where you spend your money, it's going to be affected one way or another if this passes.
Yeah, and I think it's interesting too that they have that framework, but it's also super broad of like I think just my personal opinion is they wanna see how much approval it has and how much people are really actually interested in this, because you see so many people that are for it, but you don't I feel like we're not seeing enough people question where the shortfalls are going to come from. And yes, if we get the approval, I mean, with the vote aspect of it, but then what happens if the vote they get their 60% and then they start laying out, okay, we're gonna have to start pulling from here, here, and here, and people
Right.
don't like that, then what happens?
Yeah, I
So
mean, 100%. Sales tax is expensive. Sales tax is something you spend every day. You go to Publix, you go to a restaurant, you go to get a cup of coffee. If that goes 2, 3% higher to cover the shortfall, that starts hitting your pocket as well. And I'm reading while you and I are talking on the phone here. Something really important I really didn't even realize is that if you're not a Florida resident currently, they phase in over 5 years starting January 1st. Let's say you were talking about relocating. We work with a lot of relocation people too. Let's say you're moving from New York or Chicago or any one of these areas up north and coming down to Florida. It's
yeah.
not going to instantaneously kick in if you are a new Florida resident. So this is going to benefit the people that already currently live in Florida now, whether they currently live in their homes and they want to, get the higher exemption, or people that are going to buy and sell in Florida, because they're really trying to help those people out first, because they're the ones that have been affected so far by higher property taxes.
And I'm wondering, I also think about too, like what this potentially does to an already oversaturated short-term rental market. Because
Yeah, that'd be very interesting too. I mean, that short-term rental market, that's a whole other conversation you and I have.
yeah,
Florida makes a lot of money off hospitality,
right,
and hotels are probably, besides corporate taxes, sales tax, and property tax, is probably one of their highest revenue generating things in the state of Florida. I don't know either. I mean, it's going to be interesting to see. And, you know, November's right around the corner, and I think there's a lot of opportunity for people to really educate themselves. But,
yeah,
I think the biggest thing, like you and I keep pounding on the ground, is do your research,
yep,
do your own research. Don't just go to the whatever shows up on the top of the Google page. Go to the actual state of Florida's proposed, changes. Read about it. Educate yourself. It's a lot of information out there. Don't just take one person's word for it. Don't take just my word. Don't take just Matt's
yep,
word. We're here to help you and assist you. But I always tell my clients, when they ask me for legal advice, I'm not an attorney. When they ask me for tax advice, I'm not a CPA. They ask me for real estate values, I'm not a real estate agent. I have a network of people that I work with that I refer my clients to answer that to the best of their ability. But it's your job as the consumer, the potential homeowner, seller, to do your own research, to make your own decisions on what's best for you and your family.
yeah. Well, and question for you. So,
Sure.
because again, I feel like consumers will have, these thoughts of where do you think consumers should go if so say you have someone relocating down here and, property taxes is a big thing. It's a big thing in general, but that's also a big part of what their monthly payment is. Where do you think is the most accurate place that they should go to not only look at current property taxes, but also try to have just an idea of where they see property taxes going in the coming years for
Yeah,
potential property they're interested in.
great question. We get so just so you, from a lending perspective, because taxes are paid in arrears, we use the previous year's tax bill to qualify our customers.
Okay.
Now, new construction's a whole other animal, because that's typically based off dirt, and there's, depending upon which lender you're working with or which title company you're working with, they will help determine what the proposed taxes will be through whatever equation they use. But for us, you can go to any county property taxes, unless they're in like some form of law enforcement or some secret service, CIA, or believe it or not, witness protection. You can pull any property tax record in the state of Florida by going to the county's website, property tax website. But if you want to get an idea of what the taxes are going to be moving forward, they typically do a year forward. Like I said, about 90% of the counties in the state of Florida, you go to their property appraiser's website, type into your computer proposed or estimated tax calculator for Hillsborough, Pasco, Orange County, whatever county you're shopping in, and it will tell you, put in what you think the property value you're going to pay for the home, the purchase price, right?
Key. That
And
is
I
key.
always tell my clients, do not click that homestead exemption box on there, because give yourself, and they're going to give you a range. Give yourself the conservative of the amount. If it comes in less, that's just, that's whipped cream on top of the pie. That's just going to make it that much sweeter. But at
Yeah.
the end of the day, a person like me, when I go in and I estimate something and I talk with my clients, I always want to give them a worst case scenario. So if that tax bill comes in lower, great. You already
Right.
expected a $10,000 tax bill, and now it's 7,500.
Yep.
Kudos to you. You saved 2,500 bucks. But so often, so many times, I get competing loan estimates and I get competing closing disclosures, and the gross amount of taxes that are used to qualify some of these people, I don't understand, number one, how they get away with it, but number two, why they get away with it and why they don't do it. And these are people that a year from now, I guarantee, are going to pick up their phone and call their loan officer and say,
Yeah. Be
why
pissed.
didn't you tell me this? Why didn't you tell me that? Or they're going to go to you as your agent and say, why didn't you forewarn me? So
Right.
one of the things we do on our side is I give the current tax bill. I say, listen, this is where you're at today. Here's where you can be in the future. And I've lost customers because of it. And some of my agents that I've worked with for many years get frustrated because they feel like I scared them off. And I say, listen, guys, I'm here to give.
They're pissed now or later.
Yep.
So
I don't want to be that person that tries to, tries to be shady and tell you this is what it's going to be to sell
get
you
some.
now. Like
Yeah.
you, I'm a referral based, loan officer. Most of my clients are repeat customers, or they come from agents like you, or they come from referral sources, because they know I'm just going to tell them the truth. And whether that's what they want to hear or don't want to hear, let them make that decision and let them understand what their budget's going to be. We're in very uncertain times now, and a $300-400 jump in property taxes for a lot of people is a lot of money, and that is a big deterrent on whether or not they should go for a $500,000 house, or maybe they should cut their budget down to $400,000 because they don't want to be house poor and spend all their money on their housing expense.
Yeah, no, exactly. And I have one more question for you too.
Sure.
When it comes to homestead exemptions as a whole, what expectation should realtors in general or even other loan officers be setting with people of, okay, I'm going to buy my first house. This property has not been homesteaded before, or this property is currently homestead. When should I anticipate to see either the jump in taxes or the decrease in taxes when I file for homestead?
That's
Because
a
I
great question.
very
That's a great
confusing.
That's a great question. So the easiest answer to that question is, especially like, so you look at now, okay, we're a little bit past midway of the year. Most properties are getting assessed right now. So between typically June and late August, September is when properties start getting assessed. So if you're in the market right now and you're buying a home, let's say it's closing in the next 30 or 60 days or even 90 days, my suggestion to you is to use that property estimator website and
Okay.
understand that you have to purchase the home in the year that you buy it and you file for the homestead. It typically does not take effect till the following tax year.
Yep.
So even if you bought a home January this year and you filed for your homestead exemption at the beginning of this year, there may not be a possibility that homestead exemption is going to take place in 2026. More than
Yep.
likely, forecast for 2027. So set aside your budget, even if your lender's not collecting
Super
that
aligned.
proposed.
Yeah.
Yeah, set aside a budget. And I tell my clients, go open some sort of high yield savings account, or I don't care, put in any savings account and
Let's
stick
see.
an extra 300-400 bucks a month, because when that tax bill comes out and if there's a shortage, your lender is going to come to you and say you either have to stroke us a check, or they're going to take the amount that's owed, divide it by 12, and add it to your mortgage payment. And
Yeah.
people who live on a paycheck to paycheck basis, which a lot of Americans do,
Yep.
that jump can, really spook people. And then all of a sudden they've bitten off more than they can eat. And I see it a lot, especially, and you mentioned new construction. Nothing against new construction lenders, but they are one of the most scrupulous people when it comes to property taxes, because it's based off a piece of dirt. And when that improved value goes from $60,000 to $460,000, that's a pretty big jump in your property
Well, yeah,
taxes.
it's just unrealistic to expect someone to be able to afford an extra $600 a month
Yeah, it's
the
insane.
following year. It's just
Yeah.
it's not realistic to have people, be able to expect that.
Yeah. So, listen, I think it was a great topic. I think, to wrap it up, I think, listen, it's proposed. It's
Yep.
not law yet. Okay. We've got
Yep.
3.5 months or 3 months until the vote happens. Even if it does happen, it's not going to happen all at once. It's not going to
Yep.
eliminate property taxes altogether. Third thing you need to keep in mind is that make sure that you are, like we've said a million times on this call, or this conversation right now, do your own research. There's a lot of clickbait for people that want to get more people to visit their website or to
Yep.
fill out a funnel or whatever it is. There's so much misinformation out there. Talk to an expert like Matt or I. Go on to Florida's websites. There's government websites. You can go through any AI, language model that I'm sure has more than enough information, but question the language models, question the
Yeah.
loan officer,
Yep.
question the real estate agent, and get it fact. And I can guarantee you'll be more ready for it than most will if you just do your own research, as opposed to just saying, oh, property tax are getting waived, I'm going to wait until November to go buy a home in Florida, because we just don't
Yep.
know if that's going to happen or not.
Yeah, and feel free to shoot us a message and
Of
get
course.
the, property tax estimator website that you can need, and stay tuned for us, coming back on here closer to November, and
Absolutely.
especially after November, so you guys can have a really good idea of what next steps actually look like if it does end up passing and getting voter approval.
I mean, listen, Matt and I are pulling for it, because the lower property taxes are, the more homes he's going to sell, and the more houses I'm going to finance. So we're all pulling for it. We know you're pulling for it, but let's take a step back and let's let it become reality. Then we can have another discussion about what it means to you as a homeowner, home seller, potential homeowner, and so forth.
100%. Oliver, I appreciate you taking the time. It's always a pleasure, and looking forward to the next one.
Same with you, Matt. Enjoy the rest of your day, my friend.